Today, in our live video crypto sector analytics, we're talking about the micro crypto sector. And I like to think of the micro, first of all, you're not going to see this, you don't see this anywhere. Okay, we're comparing side by side the coins in the micro crypto sector. This is Dash, Litecoin, Bitcoin, and Bitcoin Cash all on one chart. Okay, Bitcoin Cash is down here in the blue, Litecoin in yellow, Dash in purple, and Bitcoin in the royal blue. And we're comparing these coins because they're all in the micro crypto sector. I like to think of the micro crypto sector as answering the question, who will solve the Starbucks dilemma, or what I like to call the Mochaccino dilemma. Okay, cryptocurrencies are great, but will they buy me a cup of coffee? Can I get a mochaccino with that? Can I drive up to the Dunkin' Donuts window and spend it? And that's the coin. I'll go out on a limb here. That's the coin you want to invest in. The first coin that buys you a cup of coffee. Because when they can do it with low transaction fees, immediate, instant transactions at low cost, then they've achieved what cryptocurrency or what digital peer-to-peer cash is meant to be. So the problem is, obviously, Bitcoin has a lot of issues involving speed and cost. Okay, and this is, if you look at the sector, we're looking at the sector here, and the entire sector started to take off after the SegWit 2 kerfuffle back in November. And I don't know if you remember that. It seems like, that short span of time, just 2 months, seems like decades in the cryptocurrency world. But this is back in November when the SegWit 2x agreement, which was the agreement to double Bitcoin's block size to solve its scaling issues, was 86th. It was nixed. It went kerflooey. Okay, so there was the SegWit 2x. They decided not to do it, even though they had implemented the first part of the agreement. They decided not to double the block size. So what happened? If you look at the bigger picture, now this chart goes all the way to today, which is January 12th. So 2 month span. Right after that SegWit 2x agreement was trashed, then as soon as that kerfuffle ended, Bitcoin dropped significantly, but these other micro crypto coins started moving. They started moving in price. So you've got Litecoin, uh, Dash, and Bitcoin Cash all started moving, and they kept going. Okay, they kept going, and Bitcoin, you know, Bitcoin itself went on a pretty good run after that drop, after the SegWit 2x uh, went kerflooey, but Litecoin, Dash, and Bitcoin Cash also made significant moves, and they're down a little bit since their highs, but you can see these numbers: 160%, 200%, and Dash is over 260% rise since that time. So these coins have made a big move. Now I'm not including Ripple in this for two reasons, for a couple reasons. One is Ripple it's not pure blockchain, and I'm not trying to be dismissive or pejorative about it, but Ripple is obviously the leading market cap micro coin in that it competes with Bitcoin for speed and cost. Okay, and if you look at the speed of transactions, you'll see that Ripple can do 1,500 transactions per second. All right, Visa does 24,000. And look at Bitcoin way down here; it's 7 transactions per second. So Ripple is obviously a competitor of Bitcoin for speed of transaction and cost, but it's not pure blockchain. It's not, in the sense that it's not mined. Okay, it's not mined. So you'll recall that hash rate has to do with solving cryptographic math puzzles. Okay, the blockchain is formed by these unordered, unconfirmed transactions in this cloud, and that's not the same as the cloud of data that you're used to, like iCloud or any of that. This is the unconfirmed transactions on the blockchain. They're bundled into blocks by miners and then hashed. Okay, so solved, run through a cryptographic hash in order to seal the blocks and then lock the blocks into place in a way that cannot be manipulated, counterfeited, altered, or otherwise corrupted. So, in part, the speed of these micro cryptocurrencies depends on the hash rate. It depends on the mining process. Okay, these block puzzles, which take time to solve, and they take time for the network to solve them, take the previous block, a piece of the previous block, and then all the transactions that are unconfirmed transactions that are snagged from the cloud that are bundled together into a block, and then random number guesses in order to solve this problem to get this number below a certain target. And that's the cryptographic hash function that takes time and that contributes to the time necessary for transactions to be confirmed on the network. So when you talk about transaction speed, even though Ripple is extremely fast, it's not actually mined. So it's not really competing. It's not really competing in the same domain as it's not in the same stadium in the same league as Bitcoin Cash, Litecoin, Dash, Ethereum, and Bitcoin because there's no mining involved, and just like in Visa, there's no mining involved. So this sector we're looking at, we're going to look at Ripple. I'm sorry, we're going to exclude Ripple for the moment and just look at Bitcoin Cash, Litecoin, and Dash side by side. So this side-by-side comparison is very useful because you can watch which ones are taking off. You can also look at the comparative price and see where they're at. And obviously, you can see they've all made significant moves since this SegWit 2, since the doubling of Bitcoin's block size was nixed back in November of last year, November 2017. So looking at the sector, the entire sector, all right, very interesting observation that I made is the transaction speed correlates with the market capitalization order. Okay, Ripple obviously first, and again, we're going to just look at Bitcoin Cash, Litecoin, and Dash. So looking at these three, the market capitalization, Bitcoin Cash number 4 overall, Litecoin number 6 overall, and Dash number 11 overall. So Bitcoin Cash first, Litecoin Cash second, and Dash third. And if you compare that to the transaction speed, you'll see the exact same order. Ripple, Bitcoin Cash, Litecoin, and Dash. Now, of course, Bitcoin is the number one cryptocurrency, and it's way down here with only 7 transactions per second. But let's, let that or explain that away with the first comer advantage that Bitcoin has. And just notice that the transaction speed correlates with the market capitalization in the micro crypto sector. Now, speed is one of the factors that is one of the issues that's solved by micro cryptocurrencies. Cost is another one. Cost per transaction. Okay, Bitcoin median transaction fee, it says here 19, from this source I got $19.1 compared to 2 cents for Bitcoin Cash. So, big difference there. And again, transaction speed time, 7 transactions per second versus 60 transactions per second for Bitcoin Cash. So 7 versus 60, and the cost per transaction of almost $20. And then these other sources have even higher estimates. New all-time. This one says the transaction fees on the Bitcoin network have skyrocketed to new all-time highs of over $30 in the past couple of months. And then this one says $30 to $40 per transaction. That's from new Bitcoin News, and this one's from Medium. So always look at your sources and decide how accurate you think they might be. Um, okay, let's see. Okay, now if you again the entire segment, the entire sector started moving after the Segwit 2 problem set in. So these coins were all relatively just quiescent, and then they all took off significantly. So that's important to notice too. Is that this is about the time that investors started getting concerned about Bitcoin scaling issues and fees and transaction fees and times. Okay, now going to, again, we're skipping over Ripple because Ripple is, well, the other reason we're skipping over Ripple is it's bank to bank. And we're looking at the micro crypto sector in the sense of who's going to buy me my first cup of coffee. So we're not talking about, you know, a transaction between, you know, uh, B of A and HSBC. Okay, we're talking about the transaction between you and the barista at Starbucks, or you and the Dunkin' Donuts window, because that's the cryptocurrency that's going to be the winner in the micro sector. So we're looking at Bitcoin Cash, Litecoin, and Dash. The other reason we're skipping over Ripple, by the way, is that Ripple is, if you'll remember what I said, it's not pure blockchain. It's not mined. So there's no mining involved. So it doesn't depend on a network of computers to solve cryptographic math puzzles that will uh, seal a bundle of transactions into a block and then lock that block into place in a chain that cannot be corrupted. So remember, that's what blockchain is, and that's what takes the time. That's why that's why you'll hear people talking about hash rate, and it's the time it takes to solve these puzzles, the time the network takes. Obviously, backlog is an issue, power is an issue, um, and so there are several issues involved in that. But the hash rate is significant in that sense. So Ripple is not pure blockchain, and it's not mined, and it's bank to bank. So now we're going to go to the microcurrencies that we're looking at on the chart. And again, let's see this chart. On the chart, you can see that you'll see this. I don't know if you see this anywhere, but you saw it here first because I haven't seen it anywhere on YouTube. And that is these comparisons of the micro crypto sector with each coin side by side and their percentage gains relative to each other and how they're moving relative to each other. So you can see if Bitcoin Cash is relatively flat and while Bitcoin is moving or Litecoin is moving. For example, when Litecoin took off, and Bitcoin Cash took off a little bit lag afterwards. Dash made a big move and then stayed up at around 250% of where it started after the Segwit 2 issue. So this is side-by-side comparison of the micro crypto sector, and now we're looking at the fundamentals. Okay, so Bitcoin Cash is second in the micro sector. Okay, second, that is behind obviously Ripple, but it's first of all the peer-to-peer. Okay, not bank-to-bank, but peer-to-peer micro cryptocurrencies, and it's it was born back in August when a hard fork, that is the first part of the Segwit agreement, the first part of the New York agreement, when Segwit was adopted, uh, Bitcoin Cash forked, and this cryptocurrency, this nascent cryptocurrency with an 8 megabyte block size, okay, that's a lot bigger than Bitcoin. Bitcoin's a 1 megabyte block size. 8 megabyte block size just kind of uh, quietly sort of moved along without making much noise. It was way faster than Bitcoin, as we can see on the transaction speeds, and with 60 transactions per second versus 7 for Bitcoin. But uh, after the SegWit 2x, the second part of the SegWit 2x agreement was 86th on November 8th. That means that the agreement to double Bitcoin's block size was abandoned. The price of Bitcoin Cash shot up from a little under 600 here on November 8th to almost 3,000 at on November 12th. So that's 4 days, and that's pretty significant. So again, it shot up from about a little under 600 to over 3,000. It's almost 5 times its price. Now, then it got another kaboom on December 19th when it was listed on Coinbase, which is the most popular, user-friendly, entry-level beginner exchange. It's a U.S. exchange. It's well trusted, and it's got a user interface that makes it simple. And really, that's an important point to remember too, is that this market is being driven by consumers, by non-investors, by people who really, you know, aren't used to trading. They're not used to markets and exchanges and how to. And that's what Coinbase is really good at. It's really good at establishing the interface. It's basically centered around the psychology of cryptophobia, which is that trading something virtual is weird and it's techie, and the exchanges are no-name offshore exchanges, and there's all these wallet issues with pins and recovery seeds, and just there's a lot of weirdness in it, and so people are afraid of it. And Coinbase, very successfully from the start, was focused on trust and ease of use, and it's been around since 2011. So it's well trusted. When it was listed on Coinbase, its price shot up again to 3,900. So you can see that it shot up here from 600 to 1,500, and then I mean from 600. I'm sorry, from 600 to 2,700, and then up to 3,900 when it was listed on Coinbase. So it got a big boost. Now it's again a much bigger block size, so it basically solves the Bitcoin issue with on the blockchain. Okay, with a bigger block size. And we'll look at that compared to these other coins within the micro crypto space. Okay, this was Litecoin was built from the ground up for small, high-frequency transaction. It's got bigger blocks than Bitcoin. It processes a block about every 2.5 minutes compared to 10 minutes for Bitcoin. And again, if you look at the transaction speeds comparatively, Litecoin can process 56 transactions per second. So it's pretty close runner-up to Bitcoin Cash. And in market cap, it's 12 billion as compared to Bitcoin Cash's market cap of 44 billion. So it's down. It's number 6 overall in market cap, but it's second in this peer-to-peer micro crypto sector. So that's Litecoin, and Litecoin was an early adopter of SegWit. Now, SegWit was the data compression algorithm that was adopted by the Bitcoin network in August before the Bitcoin Cash fork. And what it means is segregated witness. And I know this sounds, it sounds very technical, but really all it is taking transaction data and splitting it up so that some of it can be kept off the blockchain, freeing up space. So instead of making a bigger blockchain like Bitcoin Cash did, all right, with an 8 megabyte block size. So bigger blocks on the chain. Instead of doing that, SegWit is a kind of data compression algorithm that separates the data on the blockchain. And just going back to what the blockchain is, again, you can see that the data for the transactions, if you can split it up and separate it, so some of it is not necessarily on the chain, it can free up space in here on the chain. And what's actually separated, if you're interested in the technical aspect of it, what's actually separated is the signatures, okay, the private signatures from the actual transaction itself. And they're still linked, but the signatures can be kept off the chain while the transactions are on the chain. So it's an off-chain. That's what they mean by an off-chain solution. Okay, it's not like off like this. Yo, this is off the chain. Yo, that's not like that. Okay, it's more like uh, off the blockchain. Okay, so it's an off the blockchain solution to the SegWit is off the blockchain solution to make things faster, but it's also got bigger blocks. So it's, Litecoin is fast, and whenever you separate the transactions, keep some of it off the chain, keep the signatures separate from the transactions themselves, then that allows the use of what's known as the Lightning Network. And the Lightning Network is a way of unicasting transactions as opposed to broadcasting them. And unicasting is when two peers, okay, in a peer-to-peer system, two peers exchange a smart contract governs a agreement between them through a private channel to execute an off-chain transaction. All right, so that's unicasting, and that replaces broadcasting, in which every transaction has to be distributed or distributed throughout the entire network, through the entire chain. So unicasting is a significant savings, and well, you might be wondering, okay, well, how are those transactions verified and confirmed? Because the way that transactions on the blockchain are verified and confirmed is that the entire transaction is verified using the hash function that creates these, that seals these blocks of transactions, and locks them into place. So how is that verified? And the answer is that the totals are sent to the network. So the transactions are done off the chain and privately between peers, and they are governed by smart contracts. So it's not completely, it's not just anarchy. It's not the Wild West out there. They're governed by smart contracts, but they're executed through private channels. Then they're broadcast to the network as the total of a group of transactions. So that takes a significant amount of the work of the blockchain off of the chain itself. And that's what the Lightning Network is. So anyone who can use the Lightning Network, and they're trying to, Bitcoin is trying to implement the Lightning Network too on top of its blockchain, so that will be a simple solution to its scaling issues. And the third one we're looking at is Dash, and that is a market cap of 8.2 billion. It's number 11 overall and fourth in the micro crypto sector, in the peer-to-peer micro crypto sector that we're looking at. So here's Dash at number 11 with an $8 billion market cap, and again, fourth in the micro crypto sector, and also fourth in speed as far as transactions per second, 48 transactions per second. So Dash is the one, here we see in purple here, okay, and it's got an instant send feature in which transactions take less than 1 second. Less than 1 second. So that would be, I'd be happy buying my coffee with that one. It's also got a privacy feature. It's not cryptographically private, and this is maybe getting a little technical, but it's not cryptographically private. It mixes the transactions with a whole bunch of other transactions, so nobody can follow a single transaction through the whole maze. That's the idea. So it has a feature that's a private send, and it allows you to opt into a private mode to send a transaction. It's got more stable governance than Bitcoin, and that's an advantage because you can tell sometimes Bitcoin gets a little a little crazy. It seems a little bit like anarchy sometimes when everybody's arguing over what's the best solution for scaling Bitcoin, and nobody can agree on what's going on, and it destabilizes. It causes FUD, which if you saw the video yesterday, is fear, uncertainty, and doubt, and destabilizes the market. So Dash has an incentivized P2P network structure, which is a lot more has a lot more stable governance for decision making regarding the network, as opposed to Bitcoin. And if you look at Dash, it was trading at $580 back in November, and ran up all the way to, let's see here, $1,600 on December 20th. And where is it now? Right now, it's trading at little over 1,000, a little over 1,000, 1,052. And again, it's 11th in market cap. So that's Dash, and Litecoin and Bitcoin Cash side by side. All right, and the Lightning Network, as I mentioned, is off-chain, peer-to-peer, governed by smart contracts through private channels, through unicasting. So that's unicasting, and that's broadcasting, which is the way Bitcoin works. Okay, every transaction is transmitted to the entire network. Unicasting is peer-to-peer, so it just goes between the two people transacting. Obviously, eventually, these transactions, their totals will be bundled and broadcast to the entire network, but in the meantime, they're governed by smart contracts. So it's a very clever off-chain solution, and there's some news on it just today. There's always news. The markets move so fast in cryptocurrency. There's always news today, but here's the 12th, January 12th. VPN provider now accepts Lightning Network payments. And the news here was another story on it. Bitcoin fees drop to near zero as company launches mainnet Lightning payments. And what that means is the mainnet is not the test net. The test net is where they test payments, and the mainnet is where they're real. So, so a actual transaction, a cup of coffee, I think it was at Starbucks, was actually purchased on the test net using the Lightning Network with zero fees and with no fee, and it took it less than a second, and which is what you want for your micro crypto winner. And again, the coin that you want to invest in, very simply, in this sector is going to be the coin that can buy you that coffee, that Mochaccino, in less than a second with a very low fee. Again, solving that Mochaccino dilemma in the micro crypto sector. And here is, again, our technical analysis chart. This is our fundamental analysis, and then our technical analysis of the peer-to-peer micro crypto sector coins: Bitcoin Cash, Litecoin, Dash, and versus Bitcoin, all side by side in the same chart. And this is the way that you want to invest in the micro crypto sector, with solid fundamental information backing your decisions, and good, solid technical analysis, comparing coins side by side. Again, which coin should I buy? Everybody's like, oh, which is the best coin? Which coin should I buy? the one that is the one that buys you a cup, the first coin that buys you a cup of coffee, that's your winner in the micro crypto sector. And I hope that this information will help you make smarter, better informed, more research based cryptocurrency investment decisions. Ciao for now.